buy trade. Uh, and so usually the bears would stop at support, and we would have the bullish price action candle. But if the bears go through support, does that cancel the confirmation, such as here?
Now, if here, if we had a bullish outside bar, I mean a price action, it was extraordinary. It was fantastic, for the simple reason that one of my personal selection criteria is the price action it's a must close within the consolidation. So the close was very good, since was inside this consolidation. Unfortunately, we didn't had a higher high. Okay, obviously, in order to put a price action a candle. The second reason I don't consider this one as an important bearish information is for the simple reason that, as we have seen previously, the higher time frame information, the weekly information, told us about the fact that the buyers, the bulls, close above this support level. So if I have a bullish information on weekly, it is impossible for me to consider a bearish daily information. Okay? The time frames must agree, must be in concordance. Okay? Must tell the same story and tell the same information. Okay? About, obviously, the direction I'm trying to trade. If I have the weekly that close above the support level, I have only one direction on daily, a bullish one. Okay, if weekly told me that the buyers are closed above the support level, what I have to do is waiting for bullish confirmation. Only bullish confirmation, not bearish. Okay, and this obviously in order to be in accordance with the weekly chart. Okay, I was clear.
Yes, very much.
Okay,
Jan,
please.
I never have done this trade with Pimbar because the price in large, very important range market daily, and the target dimmer, no. Bullish out bar, but swing high, not not business.
I understand. Uh, The part that I really didn't understand is what do you mean with such a high and big target? This is the purpose. This is the goal. This is the advantage of this way of trading. Okay, we are going to make more analyze of higher time frame for this reason, because we have higher rewards, because it's a safer way, because it allows us to make a better management of our investments. We can say that the target is too big or too important. This means we are afraid, and being afraid in trading is suicide. Being conscious about our limits, it's something extraordinary. When we know what our limits are, we are a few steps, I think we are a few steps forward and ahead a lot of any others traders, just because we are able to do and to take that opportunities that respect in a very strictly and a clear manner our selection criteria. And this is a very, very important thing. Okay? And I will show you a very clear and simple chart. The American dollar, the Canadian dollar. Look, head and shoulder. Left shoulder, the head, and the right shoulder. Neckline. The pattern's projection. And target. Right? I can see that I'm afraid to make such kind of analyze and identify such far away target. I'm not afraid. This is the market. This is how the market works. When we are seeing the pin bar, it is a very clear way to see that the target of this pin bar, for the simple reason that it stays on this range market support. It is very clear to identify the first target, its first target, the resistance level. I mean this 1.0581. If the price will close above, how this consolidation will act? Very simple. Will act as support. Here it is. We have a pin bar. Where is the most probably place and level to see a retracement? Where? At the range market support. Very predictable. So we have an opportunity to wait for a retracement at this range market support and to make a trade until its range market resistance. If the price would close above, how this range will act? Very simple and predictable, as I said. Will act as support. Where the price is going? Very simple. To our resistance, to our target. Now we have a range. It is very clear. We have a very strong 2 weeks pin bar, bearish pin bar. This is what the price is doing now. Where the price going? $1.0974. This is the range market support, and this is the level that the price the next week or weeks will reach. I'm very sure about it. But it's a wonderful opportunity. It's something terrific, extraordinary. The fact that we have a consolidation, we know it, we know how to react within it. So all we have to do is waiting for information, for buyers' information at its support level, for the simple reason that the price didn't reach yet its target of the pattern, of head and shoulders pattern. So this is an opportunity. The fact that we have a bearish 2 weeks pin bar, it's an opportunity to go bullish, to go long. Right now, no, it is clear. But we have to wait for the price to reach the support level. Here to wait, firstly, for weekly information. When we have a bullish information, is clear, then waiting for daily confirmation in order to make a first trade with very first money management level, this 11.25, and then first money management level, this 1.12, right? So it is very clear and simple. We have a consolidation in a very strong bullish trend, that the price didn't reach yet the head and shoulders patterns target. Okay.
The support of range market is about a big round number.
Yes, of course. Seeing that we have only 20 pips acquired between this support level and the bigger number 1.10, this bigger number will become a selection criteria. I mean, if I see a price action at the support level, the criteria, the selection criteria will be the closure of the price action above the bigger number. So it's a very important. In this case, the bigger number have a very important role. Okay, plays a very important role, especially as a selection criteria confirmation. But it is very important that this confirmation must come only after a higher time frame information. Obviously, reading weekly chart, we will wait firstly for a weekly information.
This 2-week P-bar exhaustion.
I understand. The fact that we have such a big bearish candles and get very close to the support level, you say that it could act as exhaustion candle. I think it has enough space, and it was a very strong one. So when we are seeing this very strong candles with even with a very small space, a tight space, usually the price continues to go in the strong candles direction in order to reach its target. So I think it is very possible to have firstly a retracement on this 1.1128 before starts going down to this support. It is very possible. It could be a way to trade it, but I don't care. It really doesn't make me any interest about it, because I have a weekly pattern, head and shoulder pattern, with a very clear target. I have a very strong bullish trend, so I prefer to buy it at the support level rather than selling it at the resistance. Please.
I have a question.
Please.
There is a very nice head and shoulder on the euro Australian dollar, and now the
Yes.
price broke up, and I am waiting for retracement and then the price action confirmation of the neckline. My problem is that every time I see a pattern on euro cross, there is the same pattern of the Swiss franc cross, because there is a strong correlation, between the two, the euro and the Swiss franc. And I'm never sure about which one is the best one to trade. What do you think right now? Which one is the best situation? The Australian dollar, Swiss franc, or the euro Australian dollar?
I understand.
About the
Yes.
head and shoulder.
Yes. Let's start saying that the correlation between the pair, it doesn't really influence a lot my trading decision, because I understood over the years that the most important thing is the chart itself. The chart itself, the patterns, the traffic, the market dynamics, etc., etc. So I really don't look to pairs correlation. Instead, what I'm very careful is not being overexposed on the same pair. I mean, if I have an opportunity on euro Australian dollar, and we have another opportunity to, I don't know, Australian dollar against the Canadian dollar, this means I have a double exposure on Australian dollar. I look and I read the price on every chart in a very particular way. I don't try to make a correlation about the pairs, but I'm trying to not expose or overexpose on the same pair. It is just money management selection criteria when I'm talking about when I see the pair that are have the same pair. let's see them both euro, Australian dollar, and then after the Australian dollar, the Swiss franc. What we have, and it's very, very important information, is the fact that euro, Australian dollar is at a very, very strong resistance level. Here it is. Right? Resistance, resistance, excuse me, support, 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 resistance. So we have a very, very important level. It is one of the most important level for this pair, right? We have a very clear information about the fact that in the past, with this doji, that in the past the price has made a range market between these two levels, right? Here it is. So this is a very strong information. On the weekly chart, we have a pattern, and is a very strong bearish one, right? Head and shoulders. Obviously, we have the 151.20 as neckline. This means all you have to do is waiting for this support level in order to get a retracement and then a bearish confirmation.